All right. What's up, Mortgage Coach, Trust Engine community? I am interviewing Justin Allen out of Cincinnati, Ohio for the first time. Not my actual first time, because I interviewed him with his company a couple weeks ago, but first time here in the Mortgage Coach YouTube channel. Welcome, Justin. It's good to have you, brother.
Yeah, I'm pumped to be here. Thanks for having me. I watch all the top producers you have on all the time. It's a little bit starstruck, a little bit, to be honest, but I'm excited to be a part of it and hopefully be able to provide some value back to the community that I've learned throughout the years of watching you guys. So happy to be here, and it's an honor for me as well.
Yeah, well, super grateful. You did a really an incredible introduction for me when I spoke at your company event a few weeks ago. So thank you for that. And it's very clear that you just epitomize what it means to be a mortgage advisor. Also, it's pretty clear that you like the Ohio State Buckeyes. So go Ohio State.
Right.
I can only assume that you're a fan of Cincinnati football.
I am. We were just talking about Joe Burrow, and he came from Ohio State, didn't finish his career there, but that's where he was born, so to speak. So
yeah, no, he's love watching him play, and congrats on all the success. And I'm sure you got a lot of years ahead of success, and looks like you're a golfer as well.
I am. Yeah, I try to play as much as I can with the market we're in, but I don't play as much as I want to. I'll tell you that.
Well, anything that you love outside of work, especially in a market like this.
The game you'll never beat. How's that sound?
Yeah, the game you can never master.
No, never.
Yeah. So tell us a little bit. We're gonna talk about 3 strategies you're using that really add value to both borrowers and realtors in this market. But give us a little backstory on how long you've been in the business, a little bit about your mortgage practice, and then we'll get into strategies and the results you're getting.
For sure. Yes, I've been a branch manager here at our branch. We're technically in Newport, Kentucky. I was telling Dave earlier on our notes here that I kind of go back and forth between half my business is really in Ohio and other half is in Kentucky. So we have buyers that look in both states just with the proximity of where we are here locally. So that adds a bit of uniqueness to our market because Ohio in certain cases is a little bit of a different market than it is Kentucky and vice versa. So we have to be constantly prepared for that. Obviously, we have to do a great job up front of making sure that we're asking those right questions. But I've been in the business for August will be 8 years. So it flies by. It feels like I've experienced at least 2 or 3 different markets in that time frame. So I know for those that have been in the market for 20, 30 plus years, they've seen a ton of different market cycles that we're in. So I feel like a veteran, even though I'm not, so to speak. But I originally was on my own. So I was my own LO for a number of years. And then recently partnered with Ravi Patel, who's also a partner here at our branch. We've been doing this, at our branch for about 6 months now. We have a team of 12 mostly here, and we have 1 LO in Georgia. So we've obviously poured back into our team. I think we have a great team around us, and MortgageCoach and Trust Engine is a big part of that, and constantly helps fuel the conversation of what we're trying to do in terms of providing value to our realtors and clients. And we've been able to develop some really good strategies along the way, and in large part from what I've learned from you all in the past 3 or 4 years. I've been watching you guys. So you guys have been a big part of our success, and I'm sure continue to and will be a part of our success moving forward.
Yeah, well, appreciate that, and most importantly, just being an advisor. I do believe that the loan officer of the future, really has to deliver advice with price. Like, price is important, but advice and helping a consumer achieve financial freedom, I think, is the highest priority we could give. So, what are some of the strategies and the stories? I always like to find out, like, hey, how are you helping borrowers and doing it in a way that helps recruit realtors? What are you doing at a high level? And then let's get into some specific stories and strategies.
Yeah, so it's something that really resonated with me recently. We had a company summit back in February, and I know Renee Rodriguez. He was our keynote speaker, and I had a lot of takeaways from that day. But one of the biggest takeaways that he talked about and spent most of his time on actually was delivering a +1 experience. So going above and beyond what we would normally do with clients or realtors or listing agent, and taking that one step further, whatever that means for that specific service or experience that you're experiencing at the time, and making it that much better, going a step above and beyond what you would normally do. So for me, Mortgage Coach is a non-negotiable for how I educate buyers, and not only that, I use Mortgage Coach for me goes way beyond how I use that for buyers. It's how I educate realtors at lunch and learns. It's how I get listing agents to accept our offer in some cases. It's how I get to land new buying agents. It's how I create social media content. It does more than just showing borrowers options, strategies, and advice. It does it can do so much more than that. So for me, every pre-approved client that I pre-approve, they get a Mortgage Coach. And there's three or four main strategies that I'm using right now in this market that are extremely relevant to the conversations I'm having. And it's kind of funny because I had a call on Friday from a client that I've been working with for a while. They're buying a second home down here, actually. And I was driving back to my office this is kind of a success story that is kind of funny for me to think about, but I was driving back to my office from a closing, and that client called me, have a great relationship. We've been looking at houses for a while, and they were going to make an offer, had to be in like less than an hour. So I coach all my clients and realtors to get in touch with me before they make an offer, just so I can show them the different strategies that may be specific to that property. And we do that ahead of time so they can feel as confident and informed, even before the offer is made, so they can be as aggressive as they need to be to get that offer accepted. And we're obviously deploying the full resources that they need to make a confident and educated decision. So they were talking to me about, what kind of terms they were going to offer. Long story short, they were going to offer $15,000 less than the list price. And I started to shift that conversation towards asking for seller credit instead, and how that could make more of a positive impact for them with either a 2-1 buy down or lowering the cash to close, permanent rate buy down, whatever it may be. And I could tell very quickly within about 30 seconds that they were getting very confused. So I just stopped. So I said, Karen, I'll be back in my office in 15 minutes. Let's update our mortgage plan for you that we've updated previously. And I feel confident you'll feel much more informed as to how we can make the best offer that makes the most positive impact on your situation financially, right? So we set that up, and the rest of the drive back, I was just kind of laughing because I thought to myself, like, if I was an LO that just sends out a pre-approval letter and wishes them luck, and doesn't really help provide service and guidance along the way, and I'm just sending a fee worksheet, I'm thinking about how we would be doing a client such a disservice, right? Or if an LO was going a step further, just didn't have an effective way of showing it, how would that client feel educated and informed? And the client would probably feel like the same way they did with me, trying to explain it all over the phone, right? So I got back to my office, had a great 30-minute phone call with them, going over all their options. We did a video share, screen share, shared the mortgage plan with them, and they were seeing everything live as I was walking through that with them. And it very quickly became clear to them that a simple price reduction was not in their best interest. And all it took for them was actually visually see it and have me visually walk them through it as they were looking at the same things I was looking at, right? So those are just, some of the things that we constantly do that you can't simply do with just a simple phone call, right? And they weren't going to make an offer, or they were not going to get their offer accepted with how their term was offered initially. So we were able to restructure that a little bit, ask for a seller credit, and then, get their offer accepted as a result. So one of the things I can do here, Dave, I can see if I can share my screen.
Before you pull that up,
yeah.
So I want to call out a couple of things. So, I really like that you called out Renee's +1 experience, because one of the things I'm doing right now, literally for the month of July, month of August, and month of September, and who knows, I may focus on this all year long for the rest of the second half of this year, is what I call 1 + 1 + 1, and, could equal 10. And what I say when I say that is, if you could, in a systematic way, improve your borrower experience in a way that you got one extra loan this month, and if you could improve your process and experience in a way that you got one extra realtor this month, I mean, it would have a multiple, because first of all, it's, there's 12 months in a year. And if you could systematically improve it, so you get one extra loan, one extra realtor, it's a 10x opportunity. And to me, it's all about speed to need. And you shared that too at a high level of how, you went beyond just speed to lead, like, hey, I can help you get a loan. And you were the first one there. You got to their need, in a deeper way than other loan officers. So I'm also doing what I call speed to need training. And everyone watch this, I'll put a link down below to our speed to need training playbook. And what we're going to show you now, we're going to go and show 3 different strategies of how you're specifically getting to the need of the consumer, and then how you're using MortgageCoach to visualize that advice, to show them. So with that said, go ahead and, share your screen and walk us through this.
Second here, we get everything ready to go. Good.
I'll tell you when I see it.
All right, let's see. I have them all pulled up so I can just kind of toggle back and forth between each one. So let's see, share. I don't know, Dave. I don't know if I have the ability. Here we go. Share screen. Desktop 2. Anything you're on yet, Dave?
All right, we got it. So tell us what we're looking at here.
Perfect. So that story I just shared with you, this is kind of a very, very specific strategy that I shared with them. But what I was able to do here, this is a second home, so we couldn't really do more of the things we would do in a primary residence. So this is what I would call like my price drop or rate versus rate drop strategy. So this is specifically for them. I just changed the name on the title just to take their information off of it. But the numbers here are all the exact same. So I basically made my starting point here to where the offer, so the list price here was $475, and they were going to offer $460, so $15,000 less, right? And I was showing them at the time what their payment would be, $3,060 a month, and their goal was to be anywhere between $100,000 and $105,000 for their total cash to close out of pocket. Okay, so we were kind of within that wheelhouse of where they wanted to be from a cash to close standpoint, and they were okay with the monthly payment. So we took it a step further to say, hey, if we can get, let's call it $12,000 for seller paid closing costs, let's give the seller everything that they're asking for. So we keep the purchase price the same at $475 to match that list price. Let's use $12,000 of that to buy down the interest rate permanently from 6.99 to 5.875. Look what that does to your monthly payment. Now our cash to close as a result, because some of the seller paid closing costs are going towards also reducing your out-of-pocket expense. So we're a little bit below where you want them to be from a cash to close perspective. So now let's kind of put all this together and keep the purchase price the same. Let's increase your down payment so you're borrowing less money, which is also a big goal of yours. And let's get back to where you want them to be from a total out-of-pocket expense standpoint. So now we basically just increased the down payment. So I called this column the larger down payment column. Purchase price the same, interest rate the same, monthly payment a little bit less because they're now putting more money down, borrowing less money, and their cash to close basically mirrors what it would be if they were to just offer $460 instead and not get the benefit of being able to lower their interest rate and or put more money towards their down payment. So these buyers are very savvy. They bought, I think, 7 or 8 homes up to this point. This is going to be a second home for a place for seeing their grandchildren. So it's something that they knew what they wanted coming into it. I identified that and basically put the answer key around what I knew was most important to them. They just didn't know it until they saw that visually. They would have never been able to realize that, like I said, if we were able to just have a simple phone call conversation about that, like so many other people do, obviously. So that can be applied, this price drop versus rate drop strategy can be applied to any different scenario in terms of someone wanting to go back and forth between, do I do a $15,000 reduction in what I'm asking for on the purchase price, or can we use that negotiating room more or less to do some creative things like a 2-1 buy down or a permanent rate reduction, things along those lines.
Yeah, and another term I've seen this called, that's a little more agent centric, is a counter offer analysis. Where you're really making a case with agents that, what, I am going to help you, put more homes in escrows because I can do this counter offer analysis and really help your consumer make a better decision, and then tell them this, this particular one is price drop versus rate drop. But it kind of fits under the umbrella of counteroffer analysis. And guys, like, this is just a great example of where, a sophisticated home buyer, 7 homes of experience, buying a second home. So clearly, they're very well qualified, very mortgage savvy, but because you were able to bring this strategy, you won, you turned the lead into a loan, and you wowed an agent. This is not something that every loan officer in America could do. So, great job, man. Really, really well done.
I think, and by the way, guys, like, the key for this is, yes, you're having this conversation with the buyer. And what I typically will do is I'll attach like a Loom video to this, because it'll allow me to it'll record my entire screen like it is right now. And it'll allow me to, circle certain things and, do different things. That way, when a client wants to look at it later, they know exactly what they're looking at, and it has that verbiage behind it. So video is key, in anything we do right now. And being able to attach a video to that, again, just adds to that +1 experience. But even going a step further, I'm always attaching the buying agent to this. That way that they know their buyers are getting the best experience and service possible, and they know they're getting the proper education and hyper local advice to be able to succeed in this market. That's the big key behind that is, yes, it's important to do it with the buyer, but take it a step further always, and share that with the agent to make sure that you're solidifying that relationship too.
Yeah, beautiful. Yeah, and we'll close out, guys, with some ideas to make sure you're turning every one of these +1 experiences into +1 realtor, +1 with the borrower, +1 with the realtor. All right, so what's next?
The biggest thing, so another big conversation I have oftentimes, and you can still see my screen, right?
Yeah, it looks like a cost of waiting.
Yeah. So I have a lot of conversations right now, especially with a lot of first-time home buyers, and I'm sure you guys all experience this too. And we get 2 types of common feedback in this market, or feedback or concern, I should say, and it's around the fact of, I'm going to wait for home prices to drop, or I'm going to wait for rates to drop, right? So we're having constant conversations and educative conversations about why we're seeing the things that we're seeing in this market, and why it may not make sense for either of those 2 things to happen because of this strategy right here. So I get buyers all the time that want to say, I'm going to wait for rates to drop, and I'm going to wait for home prices to drop, which we know that's not going to happen, at least anytime soon. So it's a matter of, how do we create that urgency for buyers in a way that they feel educated and confident about the decisions that they're making, and why it doesn't make sense for those 2 things to happen in this market. So this is something I actually had, I changed the name of it. I changed just the name to cost of waiting. This is an actual scenario I covered with the buyer, I think sometime early last week. And they were looking at a purchase price of, the list price was $400,000. So I labeled this $400,000 list price, and what it would look like to buy now. Again, this is very similar strategy to what I just shared earlier. This house has been on the market for, I think, at least a week and a half or 2 weeks. So there was some negotiating room and some wiggle room there in terms of leveraging either a price reduction or a seller credit. Okay, so they were thinking of going in at 390. So I kind of used that as a baseline scenario, and showed them what that would look like from a a payment and cash to close standpoint. And what I kind of, again, started to shift towards, hey, saying if you bought now at the list price, let's use a $10,000 seller credit instead to be able to permanently lower that interest rate. In this case, this is before, rates, moved higher towards the end of last week, from 6.75 to 5.875%. Let's look what that does to your monthly payment, and very little difference to your cash to close. So they started to see what that impact would look like if they offered what the seller was asking for, but used that $10,000 differently and be more creative with it, which they had no idea that they could do that with. So again, a first-time home buyer. What I also forecasted for them too is saying, hey, because this buyer wanted to wait for rates to drop before they did anything. I'm educating them on the fact of, hey, if you wait for rates to drop, I have conversations all the time of buyers saying the exact same thing. So there's a large pool of buyers on the sideline that the second rates do drop to a certain point that they feel comfortable, I ask the buyers as to, what do you think is going to happen? And all the time they say, well, those buyers are probably going to go back into the market. And I tie that all together with, you're seeing multiple offers right now, right? Not every house is going into a multiple offer environment. However, more buyers in the market with the inventory challenges that we're facing, that's going to create even more multiple offer situations, which will then in effect increase that, purchase price above what the list price is. So I'm saying, hey, if, that list price at $400,000 now, if that gets more competition, that very quickly can change from a purchase price of 400 to a purchase price of 430,000. And again, this is kind of a forecasted model in a scenario here, but to say, hey, if rates hypothetically at the time were at 5%, let's look at how that would impact your monthly payment. And at the end of the day, there's an $11 difference here between buying now at a lower list price with a higher rate compared to buying at a higher purchase price with a lower rate. And again, buyers don't realize that until they see it, right? So, the conversation kind of speaks for itself when they're actually able to see the numbers behind it and providing the education on top of that to make sure that they're making the best informed decisions that they possibly can going into making an offer. So go ahead, Dave.
Oh, and I was going to say, and you're getting ready for the refi, but you can have best of both worlds, like you're showing it. You can buy now and refi later, or date the rate and marry the house. So I love how you're doing this, cost of waiting, but you don't have to do that. You can have the best of both worlds. So you killed it. I love this.
There is, and this is just the cost of waiting, obviously, but as much as I possibly can, whenever I'm talking about rates or putting together a mortgage plan for somebody, I don't have to be talking about a cost of waiting strategy to be able to talk about buying now and refinancing later. The next thing I'll get into is kind of a rate shopping, not strategy, but something we're seeing more of in a higher rate environment. And we're prone to see more shoppers, right? I'm still using the refinance strategy on that too, showing them 3 very different options now with what the market tells us currently. But at the same time, I'm still showing, again, what a refinance would look like at the end of the day, regardless of what rate option they choose. So as much as I possibly can, it doesn't have to be a cost of waiting scenario for me to, say, hey, buy now and refinance later. I'm building that into each and every one of my TCAs as much as I possibly can to really educate them on, I don't know this for sure, but you're going to have this mortgage for maybe 12 to 18 months and be able to refinance that into a lower, longer term solution and strategy that I want you to also focus on moving forward, right? So this kind of does the exact same thing here, is where you buy now, refinance later. So it kind of ties together the 3 previous scenarios I've walked through up to that point, where you're buying at a purchase price of $400,000. Keep in mind, I'm not really factoring in much equity here, which I probably should. Really, all I'm doing here is changing the interest rate from one of these rate options to a hypothetical scenario of 5%. And you can very clearly see that it makes most sense from a short-term standpoint, where they're going to save $330 a month compared to buying now at a price reduction. And you can obviously, that scenario gives us the most savings monthly and over 5 years. And look what that does over a 15-year period, right? So again, I'm not only strictly talking about what they're doing monthly, but it's important for buyers to understand how that impacts their 5-year plan, whatever that time frame is, because you can update this accordingly, and also more longer term as well.
Love this. So this is, guys, and I love playing off the +1. So most loan officers are just providing a pre-approval. This is what you qualify for. One of the +1s was showing the actual cost of waiting. And then it had another +1 showing that you can buy now and refi later. And at the end of the day, realtors are going to love this. So let's try to wrap this up in 5 minutes, and let's do one more strategy.
Got my rate shopping here, right?
Yeah, go for it.
So very similar. Talked to this buyer on Friday, I believe it was, and they were in contract for $500,000. They wanted to put 20% down. I didn't sense that they were going to shop me, because I obviously tried to make sure I provide enough value and education throughout the entire process to eliminate that, and to make sure that we're doing everything we can to give them the full resources that they deserve. So it takes a lot of that shopping away. But, I think I got this from one of the producers you had on recently. It may have been Dan Keller or Jeremy Forcier, but
they both do this all the time. And I mean, a lot of mortgage coaches do this. This is a really, solid move.
My philosophy is, if someone's going to shop, there's nothing wrong with that at all, but I'm going to let them shop on my platform, right? I'm not going to let them shop amongst different platforms. I want them to shop on my platform based off of what we're able to provide them with, right? So this is something to where, I think on this strategy, this rate shopping strategy, I showed this client what it would look like to buy their rate down by 2 points. I think this is closer to 1 point, and what their rate would look like with little to no cost at all at the 7.25% option. And here again, like I said, I'm not just sticking to the cost of waiting strategy. I'm still showing what it would look like, regardless of your rate was at 6 3/8, 6 7/8, or 7 1/4. There's that future refinance strategy, right? So I'm not necessarily, when I talk to clients, I'm not necessarily pushing clients one way or the other, but I'm giving clients something to think about, saying, hey, regardless of what your rate is here right now, let's say they want to buy the rate down to 6.375%. Again, we don't know this, and I have to be cautious, as everyone does, with what rates will be in the future. But I'm at least asking the buyer the question to give them something to think about, saying, hey, do you think it makes sense right now to buy your rate down? And for some it does, don't get me wrong, but does it make sense right now to buy your rate down to, in this case, 6.375%, to pay 2 points when you may not have this loan for more than a year to a year and a half? Right? I'm not necessarily steering them away from buying down their rate. I want to make sure that whatever option they choose, they're not going to be in a negative position when they potentially refinance that rate in the next year to year and a half. And that's why I have them focus on not only what your option looks like currently when you get into the house for the next year to year and a half or 2 years, whatever that time frame is, but I want you to think about what our next step is and what our next goal is when rates do move lower, and what that would look like for you moving forward. That way you're not necessarily stuck on having to make that 30-year decision or whatever that time frame is up front, because you're going to have that ability at some point down the line to better that. And that's what that future refinance conversation comes into play, right? So again, you're talking about not only the monthly difference, but taking it a step further and talking about how that impacts the savings over 5 years, wherever that time frame is, and or how that impacts the interest they'll pay in 15 years, right? So it's very clear to me, and in this scenario, what option makes the most sense, and that's not only going to occur until we're able to do a future refinance when that time comes.
Love this. Hey, stop sharing your screen. So let's go and do a wrap up mode, guys. So another +1. This is just a best practice to give every consumer, whether they're going to refinance you or not. And I'm going to play a little 1-minute clip. I think I played this at your sales rally, but this is a top producer in Denver, Colorado, that put a realtor in the loop on one of her strategies. And I just can't emphasize enough, like, you know, another +1, like deliver great advice, always loop in the realtor. I'm going to play this little clip from Shay Jenkins, and then you and I will close this out. Here we go.
I was going after this huge, one of the top agents in Denver. And I had been trying since I was an assistant, I had been trying to get this person. And finally, the poor girl gave me a break and was like, Lord, like, here you go, take this one lead. And I took the lead and I did a mortgage coach. And I was just like, you know what, why not? I'm going to CC the agent on here. And then that's when the agent picked up the call and she's like, are you serious? This is the coolest thing I've ever seen. And I'm like, what, mortgage coach? And I was like, you're the top agent. You've never seen this before? And she's like, absolutely not. She's like, this is amazing. She's like, would you be able to do this with all my buyers? And I'm like, yeah. And she's like, that's so cool. And again, in her head, I think she was thinking, I'm up all night creating this massive presentation with all these numbers and graphs. And I got her business and she's one of my top agents now.
So Justin, you ever had that kind of an experience where realtors really appreciate this level of advice and this experience that you give?
Yeah, I mean, they're blown away by that. And that's why I do exactly that, as I make sure that not only the buyer sees it, I know that, you know, other realtors that use perhaps other loan officers, I know they're not doing that, right? And, you know, that's what helps set ourselves apart from others in the community is, you know, people are just sending a PDF static worksheet that don't have access to this or don't think about adding this to their toolbox. You know, it's an opportunity for us to, you know, provide that next level of experience and service and advice that buyers need in this market. So.
Well, bro, I appreciate everything you do to, you know, one, elevate advice and, you know, turn loan officers and advisors in the community you work and the company you work for. Thanks for jumping on our channel to do that. Any other closing thoughts before we wrap up today's session?
And I would just say, like, you know, we're in a market right now where, you know, the volume can be very sporadic and I know it can be very challenging, but, you know, we talk every single day. I know, you know, Anthony Casa and a few LOs here, but we talk about every day of this is an opportunity to gain market share, right? It's an opportunity market for us to find and create opportunities. And those that aren't good at that or don't give that +1 experience, they're going to have a really, you know, more challenging time finding success. So, you know, just make sure you're getting in as front of as many people as possible. Make sure that you're doing everything you need to gain market share, because when the market does turn, I promise you're going to be in a very good position if you do the things now and the right activities now to set yourself up for success in the future.
Well, everyone, make sure you keep tuning in more than ever right now. I mean, I'm driving this campaign of, you know, Mortgage Coach +1 equals 10. Like, how can we in Q3, July, August, September of 23, upgrade our processes, you know, what we're doing for consumers. So we're getting one extra loan every single month. What can we do with our process and our experience to get one extra realtor? And I really believe that, you know, what we're teaching here, the technology platform that we have here at Trust Engine with Mortgage Coach and Sales Boomerang, we can 10X any lender, we can 10X loan officers with efficiency. So thank you, brother. And make sure you're following us on our YouTube channel. If you want to learn more, you know, go to our website, Trust Engine, and fill out an application for a demo. Take care, everybody.
See ya.